In today's video, I want to be going over a core foundation within trading, which is liquidity, on how you can find liquidity in the easy way. For beginners, I'll show you some tricks that I have learned during early in my careers that helped me out just to get past of starting slowly understanding liquidity, and then later on start going in depth and breaking them down on your own using order strategy. But before you dive in to implement any strategy for beginner trader, you should understand what exactly is liquidity and why liquidity exists. So point blank, liquidity exists essentially is how price moves within the market. For any stocks or any equities, for price to move, it always have to move based on liquidity. Liquidity does two things: it create liquidity, generate liquidity, or hunt liquidity. Without liquidity, there will essentially be no movement with the market. It will just consolidate forever. It will not go up or go down, since there's never a hunt of liquidity or generation of liquidity, vice versa. Okay, so first thing I want to get into is what exactly is liquidity, and you understand what liquidity is. Liquidity essentially means just a pool of money that's just sitting there that you can kind of just go there and grab it. And also, one way to view it, liquidity essentially, best way to view it is the max pain point, where the artist side of the player is on. So if you're trying to go long, the max liquidity will be recently generate multiple highs. Those are essentially your liquidity pools that the price will go up and stop them out, and then the price will continue going down. That's what liquidity is for. Next thing, a couple things that I common seeing is the mistakes. So why people are even you have a good some decent understanding of liquidity, but you're still making mistakes where you're becoming the liquidity yourself, is because couple things. You're not seeing the obvious high and low that's generating, which you're not identifying the correct swing points of up and downs, and also possibly most of the time this fixed majority issue is the wrong time frame. Liquidity is easier to see on a higher time frame. A lot of time I see you new trader are zooming into 1 minute, 2 minutes, 5 minutes, or even like 15 minutes. I think it's still low. I recommend for intraday trading at least start with 4 hours and 1 hours, and then 30 minutes and go down. But for usually the time frame for liquidity, most obvious, I would say stick to 1 hour. Hour is essentially the golden zone. From based on most of my experience, trading doesn't forex or trading index is the same thing. 1 hour usually is pretty good. And then another thing is essentially not have a decent understanding of internal liquidity and external liquidity. Internal and external liquidity essentially are inside range and outside range, and price typically rotate between internal to external and external to internal, so kind of rotate in and out. Most of the time, if you're getting caught with being liquidity, most of the time you're identified inside liquidity, but you're not seeing external liquidity. So let's say if you bought at you thought it's shorted at a high of internal liquidity, but technically you didn't see the full picture of the bigger external liquidity that's drawing towards, then you will get stopped out still. It's always going to move from internal to external, and then external going back to internal. And typically are in the phases of, let's say, internal going to external typically is a liquidity hunt. So hunting liquidity above or below. And then if you have a external to internal, usually is generating liquidity for one side. So if a price continue to staircase down, it's generating a lot of buy side liquidity in order to take later on, swipe all these buy side liquidity, and then continue have a big flush of bunch of short seller, or institute have a huge position of shorting once all these buy side liquidity are wiped out. So essentially, that's the gist of liquidity and finding liquidity in trading. One thing I will go over in today's video, mainly I'll highlight, is a very, very easy concept you can implement just based on different session within the trading. So you leveraging Asia and London. And then if you trade, which I trade New York time frame, I leverage the London Asia range. Usually I just look for Asia. That's our London range, and then I'll trade based on that. So a couple things to highlight here before we jump into example is the criteria that I look for when I'm looking for liquidity sweep. So first, I need to find a higher liquidity time frame. So usually this is above 30 minutes. So I start with 1 hour, and then if I don't find any liquidity, clear liquidity, I zoom down to 30 minutes or go up to 4 hours to find. some sort of liquidity that's obvious, such as equal high or any low resistant liquidity run area, so which is like obvious staircase liquidity building from buy side or sell side. That's easy to identify. So essentially, in the right hand picture here, you can see this essentially is the London time in the blue box here. This essentially is what I leverage, the London high and the London low. So I use this as a liquidity, obvious. So you can see these are all low resistant liquidity that's generated in the London, and you can sell this all get swiped, get taken out. Only thing I look for is the higher time frame. This is only liquidity to look for. So to keep things simple, in this video, I will be using just the session. You don't have to essentially mark all this out. Just leveraging the session itself, it should give you at least a start of understanding where liquidity sit on the higher time frame. And then once that is swept, the next thing we look for is some sort of lower time frame sweep confirmation. So within this part, you can see highlighted in this box, orange box here. This is a candle that gets swiped of these equal highs, relative equal highs. This high also got generated during the New York pre-open session, pre-market, and then also London got swiped, the equal highs, and then the range of Asia got swiped at this candles here. And then once that happened, we look for some sort of displacement. So it's this consecutive down close candle and broke a structure. So there is a change in state of delivery, or you can look for market structure shift, either or. Once that happened, you look for entry. So entry, essentially, you can leverage any PD arrays, order blocks, breaker blocks, fair value gap, inverse fair value gap, Fibonacci, or retracement to the optimal entry OTE zone. Whatever PD array that suits you, that's fine. Only thing we'll care about on focusing for today's example is just leveraging the Asia and London building range, and by that we can identify the liquidity sweep. And once the liquidity sweep happens, we look for displacement and look for entry. So we keep it simple. And now I will be going over all of the trade I taken this week. So this week I didn't take any NQ or ES since I don't see any clear trends or trades that was a good setup that fit my criteria. So I didn't take any trade. But in gold, there was a couple pretty clean setup during the beginning of the week. For this week, I only took 3 trades, Monday through Wednesday. One of days being a little bit tricky, I think it was Wednesday, and then Thursday I didn't have anything fit my criteria, and then Friday was a good Friday, so market was closed. So here, I'll be going over step by step on all the criteria that we have talked about. So here we're looking at 1 hours. First thing we want to do is essentially map out our higher liquidity key zone, our interest zone that we want to place a trade in. So here, the first thing I have caught my eyes during the market opens, during pre-market opens, is this fair value gap here. So this 1 hour fair value gap aligned with this order block. And the reason I don't bother with this order block is because this order block is so huge. Your risk and reward will be a little bit hard to control on your entry. So ideally, I didn't bother with this order block. I just leveraged this 1 hour fair value gaps, and you can see these 3 candles. No candle bodies actually close below it, only just a wick. So I can essentially see the price it is respecting this key zone over here. So next thing is the upper quadrants that I map out. Same thing. In this case, I see this order block. There's no fair value gap up here, but this order block, I can see this candle, all these candle never close, try to break above it, but no bottle close above it. Same thing, only wicked that does all the damage, and then swap the liquidity and then move back down. So once I have this identified, I move down to lower time frames. So here to highlight here, the yellow portion essentially is the Asia dealing range, the high and low, and then the blue is the dealing range of London high and low. So next thing on the criteria we'll look for is some sort of sweep of liquidity within our key zone that highlighted here. In this case, this will be this 1 hour fair value gap and this 1 hour order block. Whichever comes first, that we want to see some sort of liquidity sweep of these high or low of Asia or London. In this case, London is the one most likely is going to get swept. So we'll pay attention to see either it swept the buy side or the sell side first, and then we'll look for market structure shift. AM session is open. Now I'm pausing this so we can see there is a liquidity sweep of the Linden low, and then we can see a push all the way down here. No market shift yet, but on the higher time frame you can see the huge wick that it has formed from the 1 hour. This showcases that there is a very strong chance of price respecting this and then move towards this order block as a magnet. The next thing we want to look for is some sort of market structure shift. Now let's play. Okay, so we have got a market structure shift here. And then for this, we look for our PD array for entry. Anything that works for you will be fine. In this case, on this day, I was leveraging two as confluences. One is the premium discount zone. So essentially, it's the 618 and then 786% of the fib in this zone. So it will be here. And then here is the word block, the lower time frame that I was looking for respect. And my entry for this was at the 618 area, and then we targeted for 2RR. For my first initial profit target is the always 2RR. That's always my profit targets. And then my next target essentially is this equal high. This clear equal high is L resistance liquidity run that I expect to get run through, and then those will essentially be my last targets. So I'll let this play out. So I already hit my first key. Now waiting for my final. Okay, so here we go. So here is, you can see something to highlight here. By having this 2 zone highlighted, to give you a clear risk and profit targets on where you expect the price. If it's respecting here, you can expect the price to move towards this order block as a magnet over here. And you can see the price have very strong support down here. Every time you move down here, it never break below the previous low. That was essentially to protect the low. Once the liquidity swept, this is essentially to protect the low. It never move below it. It will always, and then continue higher towards these lower resistance run. Okay. So next thing we look for is on Tuesday. So going to Tuesday around, okay, I think around close to it. So in the pre-market, what I saw is this order block that is respecting. And the next thing I leverage is this order block. So I'll go over this. The reason I use order block and not anything over here, because these are way too huge. And this order block never got tapped into during the previous day, since the previous day it was respecting this order block. You can see the price move up, rejected, move up, rejected. So this essentially was the order block that was respecting. And then once in the pre-market of the Tuesday open, you see all these candles close above it. This order block essentially is no longer valid. Okay. So now we dive into the lower time frame, and we look for either a sweep of London or Asia, high or low, the dealing range within this key zone we have highlighted here. Okay, this is AM session, New York. Now we see a liquidity sweep here. Now we want to see some sort of market structure shift. Okay, so here's the market structure shift. And then in this case, we'll be using this order block, my entry, and my stop will be under this. There's a fair value gap here. I don't expect to close. I move outside a little bit, and target anything roughly 2RR. Right, profit target. So So roughly align with this equal high over here. Now we'll let this play out. So now you can see, I'll kind of let it play out all the way. Okay, something to highlight here, all right? So I do want to highlight this. This requires a lot of patience to sit through. This is roughly one. So yeah, this is roughly essentially a 3-hour trade. Technically, some of the mistake that I have made here when I was trading this, I should have aimed for this equal high here, but I was trying to aim for 2R, and I see the momentum to be strong, grabbing towards this order block, which obviously did reach there at the end of the day. But reality, I probably should have put my initial target here, just aim for 1.7 RR, instead of trying to go for 2. These are the first draw of liquidity, but as you can see, once the price pull back and then we see it respecting this order block and then sweeping these relative equal low here, this is essentially protected low. We could move our stop to here outside the order block for our stop loss, minimize the risk if it does pull back against us. Since this is a liquidity swap, this is a protected low, and then if the price is bullish, we don't expect the price to come all the way back down to under this, close on anything under this protected low. So the smarter trades from this is close some of it here and then let the rest of it run to our 2RR or to the order block over here. But either ways, this worked out perfectly, just using these two key strategy. Now jump into Wednesday, which is the tougher day. Okay, yeah, I remember this one. So the reason this day is tough, okay, I'll also go over why this day is tough, but with the strategy, it still can profit from these type of days. For this type of day, this essentially is gold all-time high. When it's all-time high, there's not much support or resistance that you can look for your entries. The only thing that caught my eyes was this order block, and then you have this, obviously this order block down here, but this essentially, I don't really consider this order block. This is one single leg, and also this is way down, way below here. There's nothing, I don't expect the price to pull all the way down here. So when you zoom in from here, same thing, we look for a liquidity sweep, and this is more advanced. I don't recommend this for entry beginner trader, since this require a tight risk and tight profit margin on this. Typically, something to key highlight here is if you have these days where the price is, for example, here you can see no candle close above it, no candle close below it, you can expect already this be a ranging day. So you can either, for these type of days, just set out. Probably best for beginner trader for these type of day when you don't know a direction that where the price is going to go. But something for more experience wise, what I have seen typically is when you have this zone map out, this essentially is always your magnet zone. Price will always attract to it. So whatever price push above it will come down here eventually. But you don't expect it to push, past the 50% area. So what I mean by 50% is within order block, this line here, this is the 50%. Don't expect the price to close below this 50%. And I wouldn't try to aim anything, past this 50%. I'll look for any liquidity to for your profit target. So in this case, once this is swept, I look for some sort of market structure shift, which is here, or change the state of delivery. In this case, I use the change the state of delivery up here, and then when the price came back to here, this is my entry, and my stop is this order block. I don't expect the price, if it does want to move back down, I don't expect the price to move back this order block. And then I target for roughly 2 RR here. And also one thing to highlight here, there is a clear liquidity over here. Okay, there's a clear liquidity, sell side liquidity that is near the 50%. That grabbed my attention and say, okay, this could probably work. If the risk and reward is at least 2, I will take the trade, which is at least 2. So I took this trade, it worked out. But let's say, for example, when you look to the left side and there's no liquidity, let's say this is the candle, right? You use this candle, there's some sort of market structure shift down here, and then you use this candle for targets. There will be very hard, right? You're essentially, this is your liquidity. You want to sweep, and this is past this order block. Most of the time, it will do this. We'll end up going here, create liquidity, back up, come down, grab these liquidity, and then you see this continue to move it back up, because the true momentum of the trend is continue higher, right? So if you do want to wait on this type of trade, you could wait for the clear liquidity sweep of this, and then look for some sort of market structure shift. So in the market structure shift will be around here. So you could entry at here for your order block. This will be your entry, and then you look and for this will be a protected low, and then aim for 2 RR. So will be here. So you could technically take this trade as I would say this is probably a safer trade to take, but you require more patience for this play to play out. You need to look for liquidity to be built up from the sell side, and have a stop out of the liquidity getting swept, and then look for a shift to higher, continue moving higher. Okay, going to the next day, I didn't trade on Thursday, and I'll kind of go over why I didn't take the trade on Thursday. Okay, so on Thursday, a couple of things I'm looking for. This is the order block that is respecting. Okay. And then there is a breaker block that I see here. So this essentially is the breaker block. Once the blue passes with a lot of impulse volume, you can see the price respecting this. And this is the why, the reason. If you want to take a trade, you can take from up here, but that was not drawing any liquidity sweep. Nothing happened. I was hoping it move above to here and then get this London high and swept this London high liquidity at this breaker for an entry short, but it never went up there. Swept this liquidity and then move further down. So once it moved further down here, I saw this liquidity, and then I was hoping I'll get some sort of market structure shift within the zone. And as you can see, this is the market structure shift I'm looking for. There is no market structure shift. It never happened. So once this it didn't go, and then just sold off. Essentially, I just call it a day. I technically could have take this short entry once to pull back and then stop here and then wait for 2 RR. I could take this trade. I thought about it, but I didn't, due to the reason how overall market is very, very bullish. I didn't feel like, I feel like the price will go down here and sweep this liquidity of the sell side and then move higher. That's the reason why I didn't take it. But once I saw, which I was waiting if it's gonna sweep here, which it didn't, and it just went all the way down here, I'm like, oh, okay, I missed my entry from the short side, and also I don't feel comfortable taking the short on this day. So that's it for this week. And then Friday, it's Good Friday. No, the market was closed. If you find this video helpful, please leave a like and comments. I'll try to do more some of these video that strategy I use within my trading to help me become consistently profitable. And also, if you're interested in some of these, how I determine the daily bias using these order block and breaker block or fair value gaps, I have a separate video that I've dropped before. You can take a look at those videos for more guidances, and also I have a separate video on just understanding order block and breaker block. I think before you understand how to draw a correct breaker block and order block, you first need to understand what exactly is the order block first. So I also have a video posted on that, so please take a look if you're interested. Otherwise, happy trading.